Over the past few years, Boston's apartment market performance has ranked among the best ever seen in the metro, and the 2016 outlook is very favorable too. We'll take a look at some of the specifics for the Boston multifamily sector on today's Apartment Market Dynamics from MPF Research. I'm Greg Willett. Shane Squires is here also. Shane, as I look at these Boston stats, something that really jumps out at me is just how strong demand has been lately.
Right. Demand for 10,001 apartment units registered in 2015. That's very strong relative to the historic norms that we've seen. As you can see from this chart, Boston has absorbed 40,498 apartments over the course of the past 6 years. So this is a pretty long period of sustained, robust demand.
So what's really driving the demand story here? Is it just that economic growth has been that much better than is the historical norm?
Job growth has been very strong of late, and also playing into the strong demand has been lifestyle preferences and demographics. Boston is an area with a lot of well-educated young adults that really stimulate demand in the urban core and the suburban job clusters that are growing. Additionally, increased construction activity has yielded more product availability. Boston is a market that's chronically undersupplied, so with the new completions coming on market has really increased the ability for the market to absorb new product.
So we've had lots of supply and lots of demand in this one. That means that occupancy actually looks pretty much like it always does. The year-end 2015 occupancy number is 97.2%, right in line with the long-term norm of 96 to 97%. Digging in a little bit deeper, deliveries are having a minor impact on occupancy in select spots. Most notably, occupancy is at 94.7% in the in-town Boston submarket, and really all of those vacancies are found in just completed properties that are moving through initial lease-up.
Boston's rent growth story is also very favorable, as rent growth for new resident leases has tended to run around 4% mark during the current market cycle. Late 2015's reading of 4.4% was right at that norm established over the past few years. Following the same pattern seen in the nation as a whole, Boston's strongest rent growth right now is in the B-class product niche. The bread and butter middle market properties realized 5.4% rent growth in 2015. While not quite as strong, results certainly proved solid in other product segments, with rents up 3.5% in Class A units and 3.4% in Class C properties.
Looking ahead to the near term, we think that the 2016 numbers in Boston look amazingly like the 2015 figures. And that's a little bit different from the U.S. overall story, where for the country as a whole, we're expecting a little bit of a slowdown in revenue growth. And what's different in Boston is that we don't see the big run-up in new construction that we see in some other markets. Here's a graphic for you, and it shows that ongoing apartment construction in Boston totals 10,760 units, big by long-term historical standards, but not meaningfully different from the volume seen over the past 2 or 3 years. Properties scheduled to finish in 2016 total 5,810 units. That tally actually comes down a hair from 2015's total completions.
And with that, we're expecting that occupancy will come down to 96.3% by the end of 2016, and average effective rent for new resident leases will increase by 3.9% in the next year.
So some still really solid numbers for the Boston market in the coming year, and that wraps up our outlook for the Beantown multifamily sector. I'm Greg Willett. He's Shane Squires. Thanks for watching Apartment Market Dynamics from MPF Research.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.